Hello, YouTubers, friends, compatriots. Bootlicker, shills, Dutch, lace, peasants, vessels, minions, meat sacks. I'm Useful Idiot. Welcome. And we're going to go global again and talk about this company, Intel. And Intel's been in the headlines recently because they cut 12,000 jobs, 11% of their total global workforce. And those are pretty big numbers. And when you dig a little deeper, of course, the story overlaps in a couple ways. On the surface, it's another part of the contraction, the economic contraction going on out there. We see Caterpillar cutting back as well, all these major corporations cutting back, and of course this retail collapse that's going on. So another 12,000 jobs lost. But another thing that's interesting about this is going back a year or so and seeing that they are also connected with the buyback frenzy. So once again, as I point out, these stories overlap. So what we have with Intel is they're moving away from the traditional biz of selling computer chips. And only a year and a half ago, they were talking about what a bright future they had in making computer chips. And a lot of the buybacks and confidence in the company were based on that. And Intel is also getting a pre-tax restructuring charge of $1.2 billion in the second quarter. And of course, that will be, as they point out, pre-tax. So that will be able to, the restructuring charge is one of those things that can be written off. And the shares of 42 cents a share, up from 41 cents a share last year, and generally down 2.5%. And so things are kind of stagnated at Intel, and so very telling that that at this juncture they would cut 12,000 jobs and try and make up for the losses. But overall, they're upticked a little bit. Net revenue is up to $13.70 billion from $12.78 billion last year. So money's up, but their shares haven't budged in spite of all these massive buybacks. So you go back to 2014, and there's an article about Intel and their buybacks. And in fact, in 2014, they announced another $20 billion in buybacks, and they were buying at all-time high prices, 600 million shares at the time. But they authorized, in 2014, they authorized money to be put aside, $30 to $90 billion to do buybacks with. So that's pretty serious, especially because they have $30 to $90 billion set aside to do buybacks now. And in total, since 1990, they've already spent $106 billion. So the fact that they're adding to buybacks at such staggering levels is really saying something that for the last 25 years, they've spent $106 billion total, and then they're prepared to spend another $100 billion if it makes sense. But at the same time, in 2014, they returned $130 billion to their shareholders through dividends and buybacks. And then, like I say, you look at these two stories together, and they go together. We have $130 billion sucked out of the company and given back to shareholders through dividends and buybacks. We have the pay packages of all the executives, and their bonus packages have been inflated. The stock prices have been artificially inflated to be having a record amounts in the market. And in fact, since late 2012, Intel stock is up 75%. So all these buybacks and everything have been doing their magic. And they're still doing record levels of buybacks. And a pretty interesting pattern, though. I'll attach below Intel's own record of buybacks. In 2005, they spent $11 billion. And then right after the recession, 2009, 2010, they didn't do very many buybacks. And then they skipped a lot of 2013. But like I say, they've more than made up for it in these other years, buying back 10 and $12 billion dollars at a time in buybacks. So as I say, you see the wealth drained out of the company. A lot of money that might have gone into research and development is not going to go there. They're not only not expanding and not creating jobs, but they're in retraction, getting rid of 11% of their workforce. So there's a direct connection. There's a direct connection between central bank policy, Federal Reserve policy of cheap money, because a company like Intel can borrow this money to do these buyouts, drive their market shares up, artificially inflate the value of their company, and then to make sure everything comes out in the end, they can lay off thousands of people. And pretty soon I'll be looking for the CEO to bail with a giant golden parachute and loots the company before he leaves. I'm a useful idiot. Don't you be one too?